afternoon, morning even. It's the wrong day, isn't it? Well, it's Wednesday. How are you all doing? Happy Wednesday. Dub your bum, hit that thumb. As Pot DJ just said, how are we all doing? Morning, everybody. Baggy. Joroge. Ita Gorgons. Good morning. I'm the new one. Hello, Ita. Morning, Virginia. JC. Sun is shining. Not here, it's not. Morning, Callum. Pot DJ. Ismet. Paul. Church. Chucks. Gregors. Vitali. Harold. How are we all doing? So, morning. Had a shock. New Zealand dollar. Royal Bank of New Zealand reduced rates. Totally out of the blue. So I put a quick post in Discord about it. We're down to 5.25. Shocks like this from the Royal Bank of New Zealand are rare. If you have a look at the previous interest rate changes, it's not often you get an unexpected forecast. We had one there. That one you can kind of excuse because most of the banks during the interest rate rally had one there where they thought we got to do this quicker. So we've only really had one in the last 2 years. So this is very unexpected. Royal Bank of New Zealand said a month ago that the CPI number was too sticky at 3.3. We're not getting to target. If it bounces next time, there's a good chance that we may have to just go another 0.25% just to make sure that we get that down. 4 weeks later, they've dropped it unexpectedly and are forecasting to hit their CPI target and sustain it for the next whatever. So complete U-turn. This isn't the first time we've seen this. The Fed have switched from changing interest rates in 2025 to doing 1.25% this year. In the next 4 months, dropping 1.25%. A month or so ago, they were saying we're not going to do anything until 2025. Bank of England said as soon as we hit the 2% target, we will drop interest rates. We hit the 2% target. They turned around and said, actually, no, we're not going to drop interest rates. So you can't really factor anything the talking heads in the banks are saying at the moment as being a given because they changed their minds very, very quickly. And it's due to, obviously, the changing situation with inflation. We've got a conflict potentially kicking off more in the Middle East, which is going to, again, disrupt oil pricing, which is, again, potentially going to send inflation through the roof. So it's a really, really tricky situation with all currency markets at the moment. They can flip on a dime at any time. So just be a little careful. Why is my terminal not open this morning? I launched this a minute ago. It's not launching. Brilliant. So no opening range breakouts this morning. Why is it not loading? Oh, thank you. So I haven't taken any ORBs this morning because the terminal didn't open. I launched this. I launched it and went away. Right, what's happened? Let's have a quick look. Let me just draw some lines on the chart so we know where we're going. Okay, so I can take a 5-minute ORB. Just about to get a 5-minute ORB on the FTSE. There we go. So long on the FTSE. No trade on the DAX. In fact, the DAX wouldn't have traded pre-market anyway because the pre-market range and the opening range are the same. So there wouldn't have been a trade on the DAX this morning anyway. So that's good. I'll let it off. But pre-market FTSE, that would have been a break short today. So if you took the pre-market today, you've shorted. I've just gone long on the FTSE. We'll watch this. So the FTSE, obviously, we've had a big move because we've had the pound news this morning as well. So we'll look at all the news in a sec. In fact, let's do that now. So we've obviously had a big move on the FTSE pre-market because we've had the CPI numbers for the pound. They came out lower than expected, which is good. Morning. You can never say your name. Ozjic. Morning, Pappy. So this morning we've had obviously the 2.2 CPI number year on year. We were forecasting a 2.3, so it has gone up. We were forecasting it to go up. It just didn't go up quite as much as they thought. So we've had a drop this morning in the pound because that is lower than expected. However, it is still an increase, and it is still what the Bank of England forecast, which means that there is potential for a freeze on interest rates on the next release. So for the pound, that's not really massively bullish, not really massively bearish. It is something that they've already factored in. So may not have a long-term effect on the market, but we will see what happens with it. So we will look at all the ADRs and RSIs and everything in a bit. So obviously that one this morning is the big one. So New Zealand dollar, loads of ADR hits today. CPI not quite as expected for the pound, but it hasn't had a dramatic impact on the pound. We've had a good hour's worth of selling, but as you can see, it's not even got to ADR. So this is a reaction, but I wouldn't expect it to be a massive reaction. Obviously, that's a New Zealand dollar move. So so that's the impact we've had on the pound. This afternoon, 1:30, we've got the big one. So this is the CPI number for the US dollar. This is going to be massively impacted this afternoon, I think, either way. It's either going to confirm interest rate drop, which will weaken the US, or we may well get a higher than anticipated number, which is difficult to tell what would happen. But we are forecasting CPI to bounce in the same way as we were with the pound this morning. The year on year, they're forecasting to stay the same. So short-term bounce, long-term, no change. If these numbers come out lower than forecast, we're going to get quite a big drop in the US today. So we saw yesterday, the PPI numbers came out negative. Yeah, so we were expecting a slight drop in the PPI. We actually got a bigger than expected drop in the PPI. So the producer price index feeds into the consumer price index. So as you can see, yesterday, when those numbers came out, market reacted as it should. It dropped the US dollar. If those CPI numbers are following the PPI numbers, which quite often does happen, we should expect a further drop in the US today. So it may well be that they start to sell into the US dollar ahead of that news. We'll see. It looks like a little bit of selling coming in this morning. Not dramatic, though. So that's the big one this afternoon. Obviously, you can't tell what's going to happen until the news comes out, but that is obviously what we're expecting. We've got Orr speaking 3 times over the evening. But obviously, we've had the press conference this morning for the New Zealand dollar, which we'll go through in a sec. And I wouldn't expect that to move anything. He's not going to say anything different to what came out in the press conference this morning. So we can not worry about that. Tomorrow morning, also, we got unemployment rates. We need to keep an eye on that. So this morning's news, obviously, we had the rate announcement. We had the Fed also a little bit bullish from the Fed last night from Bostic, saying he's happy to wait and not do the interest rate cut in this foreseeable. Again, mixed messages, but we read too much into that at the moment. So this is the New Zealand news. There's your rate cut, 5.25. Obviously, New Zealand dollar collapsed on it. It was a completely unexpected move. So the market obviously had to pile into short New Zealand positions. They're expecting a 1% decrease within the next 12 months. So that's looking probably 0.25% on, miss a month, 0.25%, miss a month, 0.25%, and see how it goes type thing. So it's not going to be a fast reduction. It's going to be a gradual reduction in the interest rates over the next 12 months. They're looking at going into recession when we get this GDP figures for Q2. They're looking to be recessionary, same for Q3. So not going well, which is partly why they've decided, I think, to do the interest rate drop. The CPI returning to target within Q3. So we've had that 0.7 drop, very fast drop in the CPI numbers. They are forecasting hitting, well, I don't know what their target is. Usually it's 2%, but they might be slightly higher because their interest rates are higher. So they're looking basically for that to continue to drop over the next 2 to 3 months, which is possible. We do tend to see a bounce after a big drop, though. So we'll see what happens with that, but that's their forecast. Hence why they've put the interest rates down, because I think they're going to get there faster than expected. They can begin normalization of interest rates, which is gradual drops. Darkest period is right now. They were considering a 50 basis point cut instead of a 25. So from saying we're not going to drop the interest rates, we might put them up by 0.25% if it doesn't go well, they actually thought about dropping it by 0.5%. Massive flip in their decision-making process. Heading for a period of low and stable inflation. So it's gone from being, holy crap, this isn't going where we want it to being, yeah, no problems, we're going to be fine. See what happens next month. So yeah, that's the New Zealand dollar. So we were a bullish stance on the New Zealand dollar yesterday. This morning, I'm flipped neutral to bearish on it. Yeah. So again, it's flips on a dime at the moment. CPI came out at 3.3 on the 3.4 forecast for the year on year. So sorry, there's the 2.2. Sorry, off the 2.3. So dropping. Lower than the forecast, but still slightly increasing. So from the pound's perspective, it's difficult to read. That was kind of neutral news, because we were expecting a bounce, which would be slightly bullish because it would put the interest rate drop back. It's not quite as bad as we thought it was, which means they might still put the interest rates back. Maybe not. We need to wait and hear from Bailey on that. Again, who isn't the most reliable person on the planet at the moment. So it's kind of neutral bearish, that, because it is better than they thought it was going to be. So you say 47% chance of Bank of England quarter point cut in September, previous 36. So the market's factoring in that they think there is still a 50-50 shot. September is a real difficult one because they're following what the Europeans were going to do, ECB, which was one freeze, one drop, one freeze, one drop, one freeze. So we dropped in August. September would expect to be a freeze. So it's a 50-50 shot. So it's difficult to call that. We're looking at 0.5% cut by end of year. So that's all kind of, nothing's really changed on that from the Bank of England perspective. So that's the overnight news. Bearish still, I think, pound. Now flipping bearish New Zealand dollar as well. So let's just have a quick look at what the market's dropped to. Dead. We've had ever such a slight breakout south on the DAX. Inside bar on the opening range on the FTSE. So no volume today. Again, not surprised by the FTSE because the volume's gone in pre-market. But we are nowhere near ADR. Yeah, ADR is all the way up there and all the way down there. So we are, there's plenty of room. But it is CPI day for the US dollar. So when we have US CPI numbers, the market is very reluctant to do anything because obviously US is the main currency used for pretty much everything. So the markets tend to go into rotation on CPI day, especially in the morning, because obviously you don't want to be putting any large positions on when you don't know if the US dollar is going to collapse or pop in the afternoon. So they're waiting for that CPI number to come out and then they'll execute the orders. So might be a tricky one. Might get hedged on this one today. If so, I'll look at targets in a minute. So there we go. So we'll look at the ADRs and RSIs today. Obviously, stance has changed ever so slightly for me on the New Zealand dollar now. So the main ADRs we've got today are Aussie New Zealand. So 150 ADR on that. Bear in mind, this is a completely unexpected New Zealand interest rate drop. So mean reverting this, probably not the best idea in the world because this is a fundamental shift. The market has been caught offside. It was expecting the interest rates to remain the same. It hasn't. So they've had to sell a load of New Zealand positions, which means obviously everything is going to be pumping against the New Zealand dollar. This could well be sustained. Look at the last moves we've had on the New Zealand dollar when the interest rate hasn't changed. July 10th. Yeah. No change. That was the last one before that as well, where we had no change. No change. Now we've had a change. There's a high probability of this thing taking off and not stopping potentially. So just be a little careful. I'm going to probably get into a short position Not on the Aussie New Zealand, actually. I'm not trading Aussie New Zealand. I'm trading all the other New Zealand pairs. But I'll probably get into some New Zealand positions, but I'm waiting for that RSI and the 4 hour to get really nicely extended. So we've got a weekly extension now, Aussie New Zealand. So there is Tuesday's low. So that move there is 100% just over of the weekly range that this thing typically does at the moment. Sorry, it's Monday, isn't it? That's completely lie. That's Monday. That was the extension. And that's the pullback. So you already played out that one. Euro New Zealand, obviously big push up. Everything's going to be pushing up against the New Zealand dollar today. So whether or not we do get a pullback, this is obviously quite a big reaction. It's not huge. Considering it's an unexpected interest rate result, I would expect a good couple of ADR out of it, but we haven't got that. So I think there's a chance this will continue today. So just be very careful if you're trying to mean revert this. It will pull back, but possibly not as quickly as you may like, because obviously this is a fundamental shift. So we've had a reverse alert and a retest there, but the likelihood, I think, is probably more like that today. So we'll see what happens with it. But pound New Zealand obviously also extended. That's pretty much the same as Euro New Zealand, so don't take both. New Zealand dollar CAD extended to the upside, downside, because it's New Zealand dollar. So that's holding down there. You have had a reverse alert and a retest. It looks like it's trying to go, but suspect it won't have the legs to get all the way back up there. Don't forget, markets are just opening. Central banks are just opening, so they will probably start adding to the positions that have been done overnight. New Zealand CAD also is a weekly range hit, and New Zealand dollar US dollar. So that one obviously is the same as the New Zealand dollar CAD. Yeah, so again, same thing, just trade one or the other really. But you never know. It could retrace. It might be that the market was actually factoring this in, but it doesn't look like it. If you look at the movement we've had prior to the interest rate decision, doesn't really look like it, does it? Doesn't look like they were factoring a drop in the New Zealand dollar. So I think with that one, got to be a bit careful, basically, with mean reversions on them. So just turn off all the old trades because they get in the way. So those are your ADRs. RSIs, I've had one entry trigger on pound and euro this morning. So there's two RSI extensions there. So I'm short on the pound US dollar. I'm short on the euro US dollar. So we've got those two on the 4 hours. Yeah, so nice push up there. This is RSI 10. This is actually reading RSI 14. I should really change the dashboard so it reads the same. Let me change that over. So what I will do, let's go 10 in the first column, 80-20, and we'll go we'll leave those two the same. Or should I just switch everything over to 10? I might just switch everything over to 10 because I'm using the 10 at the moment. So I'm going to go 75, 25, 80, 20, 85, 15. I'll leave the hourlies as they are. There we go. So a big, strong extension there, as you can see on the euro US dollar. So we're way above that 80 level. So first short taken there. We've got a lovely weekly double top potential coming up to drive this back down again. Target for me will be CPI, isn't it, this afternoon? So I'm going to go with a 175 ADR target all the way down here. That will only get hit if we get big CPI numbers. If that CPI number comes out way higher than forecast, US dollar is going to pump, basically, which will obviously bring this down quick. So I'm going to target that. I mean, that would only be a news trade, obviously. Other than that, if we don't get much movement off of the news, I'll target basically down there. Pound CAD is also extended. Didn't quite get a signal on that one short, but that would have played out nicely off the news this morning. And the pound US dollar. So short on that one. Again, target on that one, I'm going to stick all the way down I'll stick that down at 150 ADR. So if we do get a bullish move on the US, that will hit target easily today, because obviously we've got a weak pound at the moment. But again, that pound not as weak as, don't forget, it's only 0.1 out of forecast, the news this morning on the CPI. So there we go. And your hourlies, Aussie New Zealand, obviously it's hit ADR on the hourly, RSI on the hourly. Yeah, so we had that big push up there. This one's climbing quite nicely at the moment. But obviously the bias on this at the moment is bullish against bearish, so it should be climbing. So any mean reversions you're taking on this, obviously you're going against fundamentals at the moment. We said that about the New Zealand dollar yesterday, and they changed their mind this morning. So the Aussies may well change their mind tomorrow. Yeah, so don't forget, tomorrow morning we've got the unemployment rate for the Australian dollar. That unemployment rate dramatically goes up, they'll want to drop interest rates quicker. So just changes by the minute at the minute. So that's a nice extension to the upside on the Aussie New Zealand. Why am I looking at Aussie US? Oh, that was extended yesterday. That's why. Aussie New Zealand. So that's a massive extension to the upside. Obviously, we just be very, very careful trying to mean revert this. This is, as I said, an unexpected move. We are pushing back up into this propulsion gap. So they sold this off very, very hard, the Aussie. If they are wanting to continue that Australian move, the Australian is the bigger, stronger currency. There's a good chance that they'll sell into that. So this is kind of turned slightly neutral now, but the Aussies really got an edge. They are definitely not at the moment saying they're going to drop their interest rates for any reason, but that CPI number will be affected by the unemployment rate as well. So we might have a glimmer of potential direction tomorrow from the Aussies on the unemployment rate, but we'll see. So that's extended at the moment. You've got Euro New Zealand also extended. And you've got Euro US dollar also extended to the upside. So short on that one. So happy to be in that one short. No problem with being short bias on the euro at all. They are dropping interest rates. However, so is the US. So this is kind of neutral at the moment. So if we do break this high today, we'll be rallying up to test this high, and then we'll be rallying up there. So that's 225 ADR. So I'll probably have 2, maybe 3 positions on by the time we reach that area, when obviously RSI will be extended and embedded. So be pulling back from there. So first entry taken. We'll see what happens with the CPI news this afternoon on the US. It will either play out this afternoon or it will go into drawdown, and we'll add positions on this afternoon. FTSE, dead as a door now. Absolutely dead as a door now. So opening range low holding for the last 20 minutes. So they are buying up the initial move. So it looks good for a break long, which would indicate bearish pound movement today. But we'll wait and see. DAX is dead as well. It's just stuck inside bars. So that's your opening range. We tipped our head out back inside opening range, so no volume today. You can tell there's no volume by the amount of movement. See how far this is ticking, how robotic these ticks are. It's not fluctuating, which you would see in high volume. It's basically moving from there to there, to there, to there, to there, to there. So it's ticking big, which means they're having to move a lot further to get prices filled, which is just indicative of no volume. Another thing that's indicative of low volume is gaps. Yeah, when you see gaps on 5-minute charts, it means there's no volume. Well, you usually see this in the pre-market session. You see gaps. When the market opens, you don't tend to see gaps if there's high volume. When there's no volume, there's gaps. because they're having to move to a completely different price to actually get the order filled. So very low volume today, and it's summer trading. So be prepared for a bit of slippage today, which is good because it may well move. But if you are trading the opening range on the DAX today, you're definitely hedged. So if you are trading that, targets wise on the DAX today, just not going anywhere, is it? Look, we've been in rotation now for 3 solid days, 3 days of rotation. It's likely to rotate today, so I wouldn't be too greedy with targets. If we can get, these are old monthly levels, but they're not really, I suppose they are pretty good. So you got a decent monthly there and there, the old weekly level. So there's 3 good resistance levels to the upside today if it breaks long. It's going to be got an itchy nose. And they're all well within ADR, so easily reach these 3 today. So take your pick. One of those 3 is going to be reactive, I'd expect. If it's really slow today, I would suspect we'll probably find sellers off of the 2-month low. We'll definitely have sellers at last month's low. Volume, obviously, we'll have to wait and see when we get there. But those are the targets to the upside. Downside, I mean, you've got yesterday's low and the previous day's low, which is well within ADR. So if I was going for a downside target, I'd see if we can get down there, because you're going to find the market buying this level up. They bought it up yesterday from the same level they bought it the day before, and we're in rotation. They don't want to go anywhere, so there's absolutely no reason for that. But bear in mind, this is all going to move when the CPI number comes out. So quiet session, I think. If I can get this back up above break even today, I think I'm just going to shut that and walk away, because I don't think there's much chance of getting a big breakout today. It's dead. Morning, everybody else. I haven't said a morning to Mumo, Franco, Neo. I think even it's a surprise drop, their rates are so much higher than everyone else that it's still going to take longer to get back down. Yeah, it's a slow interest rate drop. When you have a differential on the Aussie New Zealand, you tend to get this type of movement. Yeah. So this is where the Aussie New Zealand got out of sync, and you tend to get one take over. At the moment, because obviously the Australians are neutral and New Zealand have now unexpectedly dropped rates and are forecasting for a continuous slow drop, it's going to be like month on, maybe a month or 2 off, then another one. But it will all depend on CPI and how fast that CPI number comes down. But you would expect now this move to be the opposite, Aussie, New Zealand to be quite strong, bullish. So you've got to be careful, which I was saying, mean reverting this move, I would be in 2 minds about doing today. Well, actually, I wouldn't even be interested at all. I'm not trading Aussie New Zealand, but I would even be thinking twice about taking a short on the RSI extension on this, because I think what you'll probably find is that type of movement will be flag breaking, or will be like push accumulation. So and that's with all the New Zealand pairs as well. But obviously with things like Euro New Zealand, it's bear, and it's now a bear against a bear, which makes a range, which gives us decent movement up and down. So really you can trade that in either direction at the moment. So basically from an interest rate perspective now, if you look at the interest rates, Canadians are dropping and are forecast to regularly drop. The Swiss have dropped. They're an entity on their own. They can do what the hell they like. Euro has dropped and is going to be continuously dropping. Pound has dropped off the numbers this morning, should be continuously dropping. Yen we don't worry about because they don't use interest rates. New Zealand are now dropping. US are going to drop. Yep. So every currency now is completely bearish from an interest rate stance, apart from the Australian dollar. So the Aussie is the only bull we've got left, and they are kind of neutral to bullish, but their interest rates are still fairly decent. So, you know, look at the differential. It's 0.1 between those two now. There's nothing in it. So what we need to do now is really keep a close eye on PPI and CPI figures to give us some guidance as to what they're going to do with those interest rates. If those CPI and PPI figures keep coming down, we are going to see continued drop. If unemployment rates climb, we're going to see a stronger drop. So, this is why we watch this stuff. This is what affects that, and that is what affects the direction of the currency. So it's very important to keep an eye on everything. But like I said, it's changing so quick. Every week or so, we get a slightly different stance. We've had a good example is what was said overnight by Bostic. We've got the Fed coming out and saying we might have an emergency rate cut this week. Yeah, that was what they said last week. Or rather, that's what the market assumed would happen last week. They've gone from no change this year to a 1.25% change this year. And then Bostic comes out and goes, I might be interested in waiting a little bit longer. Yeah. Yesterday, we were looking at a potential interest rate drop this week, an emergency 0.25%. Today, Bostic's saying, I'll be happy to wait. Maybe we'll do one next month. You can't use any of this information with any reliability at the moment, because it seems that they're just watching the numbers on a daily basis and they keep changing their mind every 5 minutes. You'll also, especially with the Fed, you'll have one Fed member come out and go, we're cutting rates. And the next hour, another Fed member will come out and go, we're not going to cut rates. So within an hour, you get the market spiking ADR, and then you spike an ADR down because they change their mind. So it's very, very difficult to read anything. But what we do know is after a strong push comes a profit take move. So regardless of whether we're talking head has caused it or what's caused it, when the market's extended, we should see some kind of corrective move on it. But how it's going to pan out now, difficult to call, isn't it? Because it's changing so quick. What do I think about Euro odd? It's really difficult to call anything at the moment with this stupid thing. This last Monday's move, that 300 ADR move, really screwed everything up. Yes, you got a reversal alert on it yesterday, or was it the day before? But not very pretty, is it? So that's bearish, that's bullish. So I've been wanting to sell it more than buy it. But I think with most currencies now, we've got a fairly neutral stance from a cross perspective. Dropping rates. So it doesn't really matter if you go long or short on it from a position trading perspective. If you go long on it, you scale in when it drops and get out when it pops, because what's going to happen is we're going to get news which is driving them both up and down all the time. So it doesn't really matter which way you get in. It's just the thing we don't know is how the market is going to drop. What we've seen over the last, you can see it quite clearly on this chart, is you get news events which, they drive the market very quickly, but it doesn't go anywhere. So you sit around in drawdown waiting for weeks, and then a news event happens. And if that news event goes your way, you take it. If it doesn't, you scale in. Then you have to sit around and wait for the next news event. Whether or not we're going to go back into normal market structure, movement and trends on these interest rate drops, or whether we're going to maintain this horrible price action we've seen over the last sort of 6 to 12 months, we'll have to wait and see. But from a directional perspective, everything is kind of fairly neutral. The only thing, as I say, we've got, which is still bullish and still got a bullish stance, is Australia. So difficult. The yen basically has completely died and stalled out. So we're on day 5 now. Dead. Yeah. So this is summer trading. This is absolutely typical of August. This is summer trading. And again, it's a case of predict when the market's going to wake up. You can't. So, this is August is a time where you go, why is nothing working? Doesn't matter what you're trading. If you're a breakout trader, it's not going to work. If you're a trend trader, it's not going to work. If you're a mean reversion trader, you're going to find it hard to get into stuff because you're not going to get many entry signals. They will probably work very well, but trying to get into stuff is very hard. There isn't a strategy that can trade a flat, dead market. Intraday, you can drop down to the little 5-minute time frame and muck about down here, but it's completely random. So flip a coin or take a reversal alert. Reversal alert's going to work. Yeah, if the market's going to do that, best signal on the planet. But it's kind of this sort of is a stop loss strategy type thing. RSI2 will work extremely well. So RSI2 on the daily will work very, very well. Because what you will probably find is if something has had a big move, it's probably off the back of news and then it's going to sit around for a bit. So RSI2 mean reversion, it's unlikely you're going to find yourself sitting in 3 or 4 consecutive days of solid strength, is it? During this sort of period. So RSI2, if it does manage to make a move, will be good to use. But very good. It's going to be tricky this month. God, look at this. Look. Absolute dead. So we are 5, 10, 15, 20, 25 minutes inside bar. Totally dead. Nothing you can do with it today. So we opened there. We got pretty much an inside bar on the opening range. Then we were putting an inside bar on an inside bar. Then we put an inside bar on an inside bar on an inside bar. We just about broke the high of that bar. Then we put an inside bar in. Now we've got an outside bar. Looking like we're painting an inside bar on the outside bar that was on top of the inside bar. Basically, it's not going anywhere. So yeah, give up. It's going to hedge me 100%. So hedge targets today for the FTSE. I have to look at an hourly chart. So FTSE hedge-wise to the upside. I mean, you've got these 2 areas there, which we broke. So this propulsion gap here is one big propulsion gap basically there. Anywhere in there really to the upside is a good target. So I would probably leave it somewhere around where it is to the upside. That's ADR up there, which is just shy of the high of the last month. Downside, that propulsion move. Very difficult to pick a downside. I'll wait until I get hedged. Doesn't seem to want to at the moment. So algorithmic today. It's just see, they just like buy that, sell that, buy that, sell that, buy that, sell that. Come back to it in a minute. These seem to be interesting times to start trading. If you just started trading, yeah, but every time is an interesting time to start trading. The market's completely random. So the last 4 years, we've had the weirdest markets I've ever experienced, but they've all been profitable because the market has been moving. That's all you want. To make money in any instrument that you trade, whether it be Forex, crypto, indices, stocks, whatever it is, you can only make money if it moves. So as long as something is moving, there's an opportunity to make money. You either are the right direction on the movement, or we wait for the movement and then you get in the opposite direction and wait for the pullback on the movement. Doesn't matter. It's got to be moving. That's the key to making money. So when you see things like that, you're not going to do anything with it. But we are an interest rate driven market at the moment in Forex. So at the moment, everybody is starting to drop interest rates, which makes all FX pairs neutral. So we're either going to find ranges or we're going to find channels where you're going to be able to trade mean reversion quite happily. Nothing should really go parabolic at the moment. The only thing that's got potential for a parabolic move at the moment is Aussie New Zealand. But it changes, doesn't it? So During August, a lot of traders do system hopping. Yep. This is what system hopping is, basically why everybody system hops, because you'll get a strategy, you'll back test it, it'll work, you'll trade it for a little bit, it'll work, and then all of a sudden the market regime will change and it won't work. And you go, that looked promising. Doesn't work though. Move on to the next, because you're looking for something that works all the time, and there isn't anything that works all the time. Nothing works all the time. So you basically, people just think this is easy, don't they? That's the thing. I did when I started trading. I was seeing all these people with all these systems and strategies and showing me all these perfect scenarios of all these setups. Oh, so I've just got to wait for that setup. I take the setup and it doesn't work. And I'm like, oh, seems to have worked all the other times they've shown me. It's because they've only shown me the times it's worked. That's basically what you see, isn't it? Which is why position trading works, because if that doesn't work, it will push up. And when it pushes up, it will only be able to push up a certain distance before it gets to a point where some sellers want to sell it, and then it will come down again. So if you sell it there and you sell it there, your average price is there, and you wait for it to come down into there and you take it there. Every strategy can be turned into a profitable strategy if you just position trade it. But in these markets, the temptation is to switch to a scalping strategy. And if you switch to a scalping strategy, let's say you switched to a scalping strategy yesterday because the market was flat and dead, it ain't anymore, is it? Because there's a news. This is why you've got to pay attention to news. It's absolutely critical. It's what drives this thing up and down. But support, resistance, propulsion. That is what the market looks for. But yeah, I'm not going to go through all the pairs today because there's very little movement. If we go back and watch Monday's stream, we haven't really gone anywhere. We've had no volume yesterday. We've had news, but we had no ADRs yesterday, really. The only thing we've got moving now is obviously the New Zealand dollar. We're waiting for the CPI number this afternoon. So once the CPI number's out this afternoon, we will probably have some more indication of, you know, what is going to happen with the US dollar, which will probably kick the market into life. But I mean, look at this week. It's dead. It's just nothing you can do this week. Sit there, wait for a signal. I'm in Euro US because we've had some movement on that one. I'm in Pound US because we've had some movement on that one. But other than that, yeah, if you're not trading the New Zealand dollar, it's a dead week at the moment. So just a case of weeding. Hopefully the Euro US dollar won't skyrocket today, as I'm sure. Yeah. If it does, deal with it. Doesn't matter if it does it? If this thing pops today, where's it going? So just plan the trade. So if you're short on it, plan your trade and get out when it drops. So from my short there is 140, which is two and a bit ADR. I'm scaling in 3/4 of an ADR apart. So I'll have one on there. I'll have another one on there, assuming it gets there, obviously. It's extended now. So my average price by the time we hit that will be roughly there. So what I'll be looking for is a pullback on the leg there, back down into this area, and that is where my TP will be. Doesn't matter where it goes, does it? We're not interested in direction because we can't control direction. We're interested in pulling money out of the move. Updates on the new hedging strategy. Yeah, so I'm kind of playing with it. So I did $400 on Monday, $900 yesterday. It's an 1100 drawdown at the moment because I was stuck. So you can see I did some drawdown control down here, basically. So I took half of that position off from yesterday because obviously it skyrocketed. But as that skyrocketed, the pound US dollar obviously skyrocketed because we're hedging. So I was long on the pound US dollar from there. I closed that position there with a profit. So that rocketed. So I closed off half of this position using the profit from that, banking money. So this morning, obviously, or rather late last night, I went with another short position on the euro US dollar because it's got a short on. And because obviously we're hedging, I had to take a long position on the pound US dollar. And this is where I said yesterday in the sort of difficulty with this strategy is if you've got a news event on the cross with the US dollar on that day, there is potential for both positions to go into drawdown, which is what's happened today. So we're waiting for the US news this afternoon. So basically what the plan today is we sit here in drawdown and we wait for the US news to come out. If that US news is massively bullish or massively bearish, I don't care because one of these positions is going to go into profit. We will use the profit of that to reduce the profit of the one that is in drawdown. Yeah. So, it's just a case of waiting today for the news. That's what it's all about. You take the trades, you wait for the news to affect the trades. One of them becomes profitable. You close the profitable one and use the profit to do the drawdown control. So we'll just be working this hedge basically out until we've got it all flat. So I foresee the way this working is you will either on the day get the nice hedge exit and like happened on Monday. It was a case of they both moved independently. We got profit, a closed profit, done for the day. Yesterday, managed to make a nice profit, but we got stuck with one hedge open. So we'll deal with that today. Today, we are dealing with a hedge. So just got to wait and see what the market does. The ideal would be for the US dollar to rally today because the exposure short is higher than the exposure long. So my hedge bias is short against the US dollar, meaning I want the US dollar to pop. So the ideal for me will be for it to drop, which means I can get out of the euro US dollar, close all this out in a profit and use that profit to reduce the pound US dollar. And then I will have to take another pound US dollar long. And then I'll take another pound US dollar, a euro US dollar short tomorrow. Yeah. So you're just constantly working the hedge and you're just taking some money out of it every day. It's just making sure you keep on top of that. I think that's the key to this strategy. But I haven't fully read all the strategy documentation that I've been given on it. So I'm not 100%. There's, like with all trading, you can't bank on anything theoretical playing out again in the future. So the whole edge of this hedging strategy is news. And as I said, the downfall to this is if you get stuck in a hedge and the day after you've got news on both of the currencies, you're a little bit stuffed. If the news falls in your direction on both, job done. So it's completely random. You are reliant on news events being either bullish or bearish, which you can't foresee. But what you've got is the US dollar, which is the main currency, which will do the vast majority of the movement and has the most regular news happening on a daily basis. That is the one that is eventually going to get you out of it because it will have a big move at some point, which will always get you out of these hedges. But how long it takes and how much drawdown you go into while you're waiting for that news is difficult to forecast. So it's a very discretionary strategy. Like yesterday, I closed out 645 on the pound US dollar. Yeah. And I used all of it, well, 605 of it, to do drawdown control on that one. So, but the only reason I did that was because earlier in the day, I'd hedged out those pound US and euro US positions to make about £1,000. If I hadn't have done that yesterday, I'd still be in those trades. But because those trades closed, I took a second opportunity. Is that right or wrong? Don't know. It's discretionary, isn't it? There's a massive amount of discretion in this. I was going to build an EA to backtest it in MT5. Because in MT5 you can get trades taken in multiple currencies at the same time to backtest. But what do you build as a model for it? It's not the sort of thing you can build a best case scenario for, because the best case scenario is the news going in your direction. That's never going to happen in the same order with the same veracity and volume as it has ever happened in the past. So whatever you're doing backtesting is never going to give you any model that's going to help you in the future. So it's just about controlling drawdown at the end of the day. I've made $1,300 this week in 2 days. I can just shut this out right now and take 200 or 100 and whatever, because I've got $1,100 of drawdown. So worst case scenario, over the last 3 days, I've lost absolutely nothing. But the US dollar this afternoon, if this drops, for example, this afternoon, down to 0.2%, my decision as a discretionary trader is I'll take that 0.2% loss and walk away with a 1.1% over the last 3 days. Yeah. Or it might all go into profit this afternoon. It'd be very, very difficult for that to happen though, wouldn't it? Because I've got a long on the pound US dollar and a short on the euro US dollar. They can't both go into profit this afternoon. They could if the pound US dollar suddenly took off because the pound rallied. I would be shutting that. Yeah, and I would have to use some of that to reduce some of that. But then I'd have to take another pound US dollar long to hedge the euro US dollar position. So I mean, it's a very tricky strategy to test, because you've got to do it live and you've got to be watching it. I'm watching this regularly just to see what's going on with it. But don't know. I will see how it goes. It's one to play around with. Flip a coin trading, not for me. All trading is flip a coin trading, Franco. Doesn't matter what strategy, what indicator you're using, the strike rate is 50%. Flipping a coin is as good as taking a reversal alert, taking an MA moving average cross, taking a support resistance bounce, taking a propulsion gap bounce. It's all the same thing. Wait for a good setup. What's a good setup? There isn't a good setup. Every setup is random. The best, this is, we're talking about system hopping. This is why people system hop. If you had an RSI extension to the upside above 90, huge push at a monthly resistance with divergence on the RSI, which was the right shoulder of a head and shoulders pattern, yeah, having received a reversal alert and a retest and break of the low just before a news event was about to be released, that setup, everyone would look at that and go, that is a 5-star setup. You've got support and resistance levels. You've got a head and shoulders pattern. You've got an extended RSI, so they're ready for a pullback. You've got a reversal alert showing the sellers have taken control of it. And I've got divergence, which is bearish on the RSI. Fantastic. News event comes out. Best setup in the world. Gone wrong. Why? Because fundamentals. Because that's what drives the market. And everything is random. Doesn't matter what you do. You've got to have a reason to get in. We had this conversation in Telegram yesterday. You've got to have a strategy. My strategy is RSI based and market reversal based. But I could flip a coin and make just as much money, because flipping a coin on the New Zealand dollar this morning, if you take any trade this morning or last night on the New Zealand dollar, the odds of the New Zealand dollar moving in your favor this morning were 50-50. So if your setup lands before a fundamental news event, doesn't matter what the setup is, it ain't going to work, is it? They've done it. The university, I can't remember which university it was. I think it was Oxford, have published a paper on the coin flip. Can't type. I can't remember. I'm not going to be able to find it now, but there's a paper published on it. I don't know. But obviously, every single candlestick that you come across has got, we've got a massive bear move, yeah, which was caused by the fundamentals on the pound US dollar this morning. So the CPI number came out ever so slightly different. So fine. But what have we got now? There's a massive bear candle. Everything should be bearish. The number wasn't as high as expected. What's the next candle? Bullish. Yeah. Doesn't matter what the last candle is. Look at the FTSE. Yeah, hedged on it. We had a massive bull move. Yeah, on the news. We're back to where we started. So it doesn't matter what happened there. What matters is what is the weight of orders next. So this 5-minute candle that's coming down now means there's more bears than bulls over the last 5 minutes of time. What's the next 5 minutes of time going to be? I don't know. You don't know. It doesn't matter if that is the best support resistance bounce play and your A triple star plus book. The only thing you've got is risk management, because the next candlestick has got absolutely nothing to do with your strategy, because the volume of orders in the banks and institutions on the next 5 minutes is going to determine whether or not your A plus strategy works or not. This is why everybody hops strategy, because somebody showed me a strategy where when you get a propulsion move like that, if it returns to the source of the move where it broke, that's exactly where you buy it from. And there is a strategy that is trading that. Yeah, but go and test the strategy historically. You might find you've got a 60% edge. That doesn't mean that the next 10 trades are not going to fail. Yeah, so that 60% edge that you had might now drop down to 59%. Depends how long you've backtested it for, whether it's 2 months or 2 decades or 2 years or whatever. But the strike rate is dependent on the test period, not the strategy. If you backtest any strategy over a period of 2 weeks, you can get 100% strike rate. If you backtest that strategy over 2 years, that strike rate might drop down to 65%. If you backtest it over 20 years, you might find it drops down to 42%. What's the next 10 years going to be? What's the next 10 trades going to be? It doesn't matter. It's completely random. It's got nothing to do with what you have on your chart, which is where everybody goes wrong. I've got this, I get it all the time in Telegram. I've got this amazing strategy. I've backtested it. It's got 70% strike rate. Excellent. How long you backtested it for? 2 months. Really? You've gone over the last 2 months. What is it? Let me guess. It's a mean reversion strategy because we're going sideways. Yeah. Okay. So that's not going to work, is it? In any other market condition. Test it over the whole 4 years post-COVID. Test it over the whole 4 years pre-COVID. Then come back and tell me if it's got a 70% strike rate. Never hear from them again. Yeah, this is why people system hop. Don't understand the randomness of this thing. It is completely based, every candlestick, on the weight of bull and bear orders placed in 10 institutional banks around the world. And they don't know what the volume of orders is going to be. They know what theirs is. They don't know what theirs are. So if they've got 100 million to go long and they've got 200 million to go long, they're going to lose. If they don't know, how do you? How can you formulate a strategy on random price movement? You can't. Which is where that coin flip paper published by one of the universities proved the point that you can flip a coin and you won't make a lot of money, but you won't lose a lot of money either because it's random. The only thing that affects your profitability is risk management. That is all you have as a trader, risk management. And that's the only thing that can help you, basically. So if you use a risk management profile that uses a stop loss, you will get stopped out on a regular basis. If you use a risk management profile that changes the price of your entry, you won't get stopped out on a regular basis, but you will take more drawdown. But your probability of success will increase tenfold. What we're looking to do, make money. What do you need to make money? Success. what should we be trying to do? Increase the probability of success, to extract money from a random moving market, not trying to get a system or strategy set up correct, because that is based on random movement that is never going to repeat itself. So the best setup, people always talk about, I'm going to wait for a good setup. I'm not having a go at you, Franco, here, by the way. I'm just saying this is what, this is what everybody says, and this is why the system hopping thing happens. I'm waiting for a setup. I'm waiting for a setup. I'm waiting for an RSI extension. My strategy doesn't require me to be correct. Everybody else's strategy requires their setup speed to be correct for X% of the time. But they will not allow a 10 losing streak. Hop. Same thing. Hop. And you end up in this cycle. Find a system. Doesn't work. 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 You never get out. The worst possible place you could ever go to try and find a system is this place. Trading systems. There's 3,289 trading systems on here. So if you spend a month on each of those trading systems, how long will it take you to figure out that none of them work? Divided by 12. You'll be 274, and that's assuming no one adds any. You'll be 274 years old by the time you've gone through the trading systems on here. None of them work because they're all based on what has worked in the past, which is not going to repeat itself. People come to me all the time with trading systems from Forex Factory. Just not interested. They're all recycled versions of the same thing. Let's try and guess when is the best time to get into the market. No idea. No one knows that. If we knew that, we'd all do it, wouldn't we? All good fun, but like Pot DJ said, system hopping in August is a pandemic. People do it all the time because August is typically very contracted. Market conditions change. So, this is what, with any system or strategy that you are backtesting, you have to test your system or strategy over all market regimes. So look at where we are here at the moment. This is the lowest ADR period we've had in 20 years. Yeah, your system has to work here. It has to work in normal ADR conditions. It has to work in volatile ADR conditions. It has to work in extreme ADR conditions. So look at the ADR profile there and look at the ADR profile there. Any system or strategy you test there is going to have a totally different result there. It will also have a totally different result there because that is different to that, which is different to that. No hope. It's just not going to work. So, every strategy that I do is tested over calm markets, volatile markets, and very volatile markets. You just got to test it everywhere. It's not going to survive that. It's not going to survive that. That's Liz Truss. That's COVID. You can't survive Liz Truss and you can't survive COVID. Yeah, you're going to lose money here. Everybody is going to lose money there. Yeah, these events happen once every 4 to 10 years. Tough. Deal with it. No strategy is going to work in this. If you happen to be short at that time, you didn't hold it that long. So don't ever come and say, wow, look at that. My trailing stop never got triggered. That is an outlier. You remove that from your back testing because it ain't going to happen again. Yeah. So you've got to be careful with system hopping. The pandemic of traders, basically. Mumo, it would also work for NAS and US versus US dollar. What, the hedging strategy? Yeah, in theory, yeah. You could hedge the NAS against the US. Yeah, because all the indices are most of the time are inverse to US dollar movement, aren't they? So in theory, if you went long on the NAS in the morning and short on the US at the same time, no, sorry, you would go long on both, wouldn't you? you'd go long NAS, which would mean that the US dollar is coming down. So you would long the US dollar in case the NAS dropped. So yeah, you would go long. So you would go long index, long currency. So what would you trade? So if you wanted to do the NAS, you would trade both in the same direction. So if you were going long NAS, you'd go long pound US. Is that right? I don't know. This is why I'm using currency pairs. It's so much simpler, isn't it? So I don't know, actually. Good night, going to burn all my books now. Yes, go burn all your books, Franco. Books are good. Yeah, books give you education. They give you knowledge, but knowledge doesn't mean you're going to make money, does it? Yeah. The cleverest person on the planet, right, can do something and get it wrong. Yeah, look at space flight. Yeah, super clever people, know what they're doing, blow stuff up. Yeah, you can be an expert in price action, reading price action, but the next candlestick is in the future, and just because you know what can happen doesn't mean you're going to get it right. What risk is all about, isn't it? If you look for a paper, Google Scholar might be a better option to search. Yeah. Can have a look. I mean, it's out there somewhere. Can you recommend any videos to learn Quant Analyzer? Go on the Quant Analyzer website. Yeah, I mean, there's no videos to learn. You just load the strategies into it and it shows you the profit curves and the data. I don't know that there are any. Go and have a look on their website. Free course. That's probably more to do with strategy quant than Quant Analyzer. There you go. That's by Strategy Quant 7 months ago. Did I really have to Google that for you? There you go. There's 10 videos about it. What I was asking was, could I do a video? No, why would I need to do a video on that? There you go. Load Quant Analyzer. This will blow your mind. Load. Get all your tests. Put the starting balance in. Use the same settings for all the loaded strategies. Go. Click continue to load them all. That's it. There's nothing to it. Ta-da, that's the portfolio result. There's all your trades. Yeah. If you want to make it into a portfolio, all you do is you click that button, which selects all of them. You click the create portfolio button. That creates a portfolio. You double click on the portfolio and that gives you your portfolio result. And it shows you all the pairs, individual profit, how it panned out every single month, how many trades were taken. You can go and look at all the trades. You can look at the equity chart. You can look at the portfolio only. You can do all sorts of stuff. Show volatility. Again, this is important. This key. Now, this is testing 2020 to 2024. So this is a 4-year back test, yeah? we've got a period of fairly low volatility in there. We've got a period of very high volatility and very big volume swings. We've got a period of reducing volatility. We've got a calm market. Yeah. So it works during that. It works during that. Has a few problems during it. Of course it will. It works during low volatility and reducing volatility, and it works during stable volatility. If I was going to trade this, I would expect for 216 days, nearly a year, not to make any money. Yeah. Most people will throw this strategy away. Yeah. Think about it. If you started trading this strategy on that day there, you found the Holy Grail. You got a knockback there. So for a month and a half, you were like, holy crap, this is amazing. And then it reduced your profit by about 20, 30% of what you've made. You'd lost it. You'd be like, nah, it doesn't work. It's good while it worked, but I need to go to another strategy now. But then you missed all of that because you moved to another strategy. If you started trading the strategy there, it immediately drew down into your account and you were like, throw it away. But you missed the next 2 months of it recovering all of that money for you just before a catastrophic fail. So if you didn't jump ship there, you definitely jumped ship there. But then you missed it over the next 2 months, making you a lovely little profit and then continuing to make you a profit for month after month after month after month. This is the difference between people sticking with a strategy from day one or hopping on day one. Yeah. This equity curve over 4 years produced $175,000 in profit. Yeah. Somebody backtesting this strategy with my EA from October 2021 to May 2022 would say it's utter shite, doesn't work. No, it didn't for that 216-day period, but I'm not interested in that. I'm interested in long-term making money out of the markets. It's not going to work in a high volatile, increasing volatile market. Yeah, when volume is increasing and volatility is increasing, the strategy doesn't perform well. Why? Because it's a mean reversion strategy. Mean reversion strategies do not work in this period because this period is indicative of breakouts into trend. Won't work. But what does the market spend 90% of its time doing? Not trending, going sideways or in channels. That's mean reversion. So where does it work? Pretty much all the time, apart from when you're in a big, strong trend period. Now, what is that period in time? The interest rate rally after COVID. Everything went parabolic. Of course, it didn't work. So tough. Don't have a very good year that year. This year, I'm not having a very good year. Why? Because we've had interest rate stagnation starting to drop. We're starting to drop. Volatility started to increase, isn't it? We've had wild movements. That's going to change because interest rates are going to start to drop as they did previously, very, very slowly and nicely, rather than going parabolic and changing by 1/4 to 0.5% every single month on every single currency pair. Yeah. That's all you needed. Save me hours. There we go. Job done. But yeah, that's it. That's it. See, this is what I mean. This is the whole thing about finding the perfect setup, system, strategy. There is no such thing. Nothing is going to work. You could put a filter on this to say that when volatility is picking up like this, don't trade the strategy. Yeah. But it started to pick up there and it made a nice little profit. So you're going to miss that profit. But there's always ways you can filter stuff. But the more filters you add, the more indicators you add to your strategy, the more variation and the more variance in the strategy you're adding, the more complex it gets, the more chance there is it isn't going to work in the future. Simplicity, market condition, signal, trade entry, exit, backup plan. That's it. This is why my system is so unbelievably simple. Because the only way you're going to make it is keeping it simple. Is RSI extended? Yes. Short it. Does it work? Yes. Take the money. If it doesn't, plan for additional entries to move the price to a level that can make us money. That's it. There is only one condition. There is only one signal. The rest of it, I haven't got a clue about. I don't know where it's going to go. Please tell us about Euro New Zealand. It's basically gone up today because the New Zealand dollar has dropped on unexpected interest rate change. Basically, that's it. It's gone up. And it's probably going to continue to go up because we weren't expecting them to drop their interest rates. Therefore, every New Zealand dollar pair is going to weaken. Again, somebody mentioned earlier currency, looking for a currency correlation chart. Yeah, currency correlation charts are okay because most of the time they stay similar, but currency correlation changes over time depending on fundamentals. Yeah, so for example, while the Aussie New Zealand have been like that with interest rates for 12 months, the correlation between the Australian movement and the New Zealand movement has been very similar. It's been going up and down together. So when the Aussie pushes, the New Zealand pushes, and vice versa. Yeah. When you have interest rate differentials, as we have now with the Aussie New Zealand, so the New Zealand dollar has dropped its interest rates unexpectedly. The Australians are not and are not planning to. The interest rate differential now is going to increase, isn't it? Because if the Aussies don't change their interest rate and the New Zealanders do, the Aussie New Zealand is going to fly. So the correlation between these two pairs, as of today, is going to widen and change. So you can't rely on currency correlation all the time. So these correlation charts that you'll find out there, you need to check them on a regular basis. You want them as correlated as you can. The pound and the euro are very correlated. Yeah, so which is why pound US dollar and euro US dollar are very good ones to use. But you're going to get deviation, obviously. Look at that. That's not because of US dollar. That's because of pound. Pound caused that. US dollar is weakening today, but the pound is weaker. Yeah, so this is where currency correlation doesn't help you with any kind of hedging strategy. And currency strength meters are the most useless thing on the planet. I know that. It's the New Zealand dollar. I can see that on my chart. All this does is a replacement for your chart. Oh, look, everybody's saying, look, the New Zealand dollar is really weak at the moment. Really? You don't say. Just look at a chart. Yes, you can see it's weak. You don't need that. That's useless. Don't ever use that. I spent months and months and months using this thing, trying to use this thing to determine what to do. This tells you what's happened. It's got, again, absolutely no idea. This thing, people will be looking at this thing now. I can guarantee it. They'll be looking at this thing now and going, New Zealand dollar is really weak. We need to buy it. Why? Because it's weak. It's gone down, so it's going to go up. No, the fundamentals have shifted. It's gone down because the fundamentals have shifted. It's probably going to go down further. Yeah. If you use this as a New Zealand dollar's weak, I'm going to sell it. It could well go back up again tomorrow, couldn't it? We don't know. All this useless. Everything historical has a use for formulating a system or a strategy. And everything I do is based on historical data. The whole premise of my strategy is based on historical data. But I'm not interested whether it works or not. I need a reason to get in, and it's got more probability and a higher edge of working than using stochastics, CCI, MACD, or anything else. That's the reason I use the RSI. But it's not right. But I don't want to be right. Like I said, I want to extract money. There's a very big difference between trying to be right and get a strategy that's successful and actually making money out of the market. They're totally different things, not really related. Like we've just said, coin flip. You can make money with a coin flip in the market, but it's not going to be dependent on the coin flip. It's going to be dependent on the series of heads and tails that comes in the future, which is an unknown factor. All you have is risk. John, please tell me about Euro New Zealand. I feel like I'm in a time warp. I've just done that. It's a buy at the moment because the euro is weak and the New Zealand dollar is now weaker because they've dropped their interest rates. What's going to happen in the future, I don't know. But it is, at the moment, I wouldn't get in front of it today because we've got an unexpected result. Highly probable we'll get an A-shaped recovery on it over the next week. So if you want to start a short position here, go for it. It's probably going to come up and test this area up here somewhere. And if it does, short it again. Your price will now be there. Wait for it to come back into this area. If it doesn't make it back to that area, wait for it to test that area. And if on the way up there, it makes another propulsion gap and pushes all the way up to there, short it and then wait for it to come back to that area. But we know it's coming back to either here or here at the moment. In the same way as when it pushed down to here, we knew it was coming back to here. In the same way as when it pushed all the way up through this bit and made all these propulsion gaps, we knew it would come back and test those. And as it came down, it made all these propulsion gaps and we knew it would come up and test those. And as it went up, it made all these propulsion gaps. We knew it would come down and test those. And I can keep repeating myself, but that's what happens in the market. It goes up and it goes down. That's all we know. Simple, isn't it? Right, I'm going to leave it there today. I'm going to basically... so I just wanted to see what the RSI is now on the Euro US dollar. I'm going to be back tomorrow afternoon. And we'll trade the New York session. The FTSE today, just before I go, obviously the market's in rotation ahead of CPI, so it is a hedge as I suspected. I don't hold out much hope for getting out of this one today. So all I'm going to do, I can't even see it on this chart. All I'm going to do is hold the hedge with an ADR target up here. So we've got CPI coming out at 1:30 this afternoon for the US dollar. That will affect all markets if it's an unexpected result. If it's not an unexpected result and we get an exact forecast, it's probably just going to whipsaw a little bit and hang around. But if we do get an unexpected result and some kind of deviation on the result, we should get a big move up or down. So upside target, that will be slamming through these propulsion gaps into this resistance, which is ADR. If ADR fails, we've got a monthly support, resistance rather, which you're likely to find limit orders at. So that is a sensible target to the upside. Downside, there's so much chop here. It's very difficult to pick any real decent support resistance level out of all of that. So I'm just going with this low, which is where the target is set, which is just shy of ADR. So this is a nice double bottom. Yesterday's low and the previous day's low. So we know this is an area the market has bought up 2 days on the trot. So makes sense if we hit there. There's likely going to be limit orders triggered ready to do the same thing again, because obviously defending this zone. So that's my target to the downside. So if we have a big spike, what I'm looking for is basically some limit orders to push back and help me get out of the trade. So that's all I'm going to do with it today. If it just rotates within ADR, it's a $300 loss, which is fine. Nothing you can do with it if it ain't going anywhere. So yeah, we're back tomorrow. We'll trade the New York session tomorrow. This afternoon, if you are using ORB EA or SIH EA for trading the indices, just be careful. If we have a big news event, this will have moved already before the market open at 2:30 this afternoon. If it's done that, the likelihood is we'll have light volume, which means that you will probably get hedged. So I'm going to leave this running, but if the news results in a very big ADR move or something like that, I wouldn't trade the New York session this afternoon. It may well revert the whole thing, but if it doesn't revert the whole thing, it's probably just going to rotate. So not really worth sticking in, to be honest. So I would be careful this afternoon and just, just with any news event, you're always going to find there's a high probability of movement before the market open, which tends to end up in a hedge. So, all right. So tomorrow, 2:15, back for the New York session. We'll have a look at what's going on with the FX markets and what the impact of CPI has been. So obviously, bear in mind the CPI this afternoon. That's your main news. And we've got unemployment rate tomorrow morning as well. And we've got GDP for the pound. So I'm on tomorrow afternoon after retail sales and unemployment claims. So before I come back on tomorrow, we're going to have a CPI figure, an unemployment rate, a GDP, and retail and unemployment claims for the US. So there'll be a lot to analyze tomorrow. So hopefully we'll get some movement. But like I said, it is August. We are often sitting here just hoping something moves, aren't we? So, all right. So have a good day. Anything you need, let me know. I'll be back tomorrow. I'll be in Telegram or Discord if you need anything before then. Other than that, have a good day, and I'll see you next time.